This is obviously just a chart of SPY over the last couple days. I think the best thing we could do is kind of start out here and talk through a little bit of what we observed with the broad market over the last few days, using the strategy for how to interpret or identify what type of market we're experiencing. You remember me saying that VWAP isn't only something where you can literally get in a trade, kind of an alpha generating signal, but also it's a market interpreter, if you will. It's a broad benchmark that we can read what the market is likely to experience going forward. So obviously here we're looking back at Tuesday's activity on SPY, then Wednesday and Thursday. What I observe off the bat is the flatness of VWAP during choppy environments. You remember we talked about the kind of containment that you're probably going to experience within the deviation bands. It's very ugly what I've just drawn there, but you can see what I'm referring to: a flat volume weighted average price, an oscillating or crossing choppy market, and containment within the deviation bands. So it's very much characteristic of counter trend behavior. Now, if we contrast that with what we see later in the day as it breaks out into the fast lane, we're not seeing so much slope on the indicator. You can actually tell that the market has gone from a kind of oscillating upslope, downslope, into a consistent upslope. And we're now into the fast lane, finding a little bit of, I wouldn't call that support, but ugly support, and then eventually some nice clean support at the deviation bands. On the next day, obviously a gap up and run higher, more fast lane behavior, but pretty brief. And then notice how the market refuses to get back into the fast lane multiple times here. That inability to get in the fast lane foretells a much more likely magnetic attraction back towards the VWAP and sideways behavior. I do understand that later in the day, obviously it pops back up off of the volume weighted average price and tries to get in the fast lane, but not substantive volume and not really a great point or time in the day for a breakout, right? If it was going to go higher, it would have sustained at the fast lane. It didn't do that at all, came right back to VWAP, mostly a sideways day, or a day where we, I guess you could say, gapped up, traded up, and then went sideways and kind of acknowledged that price or absorbed that price all day. That new higher price, I should say. Today's trading obviously makes a high of day right near the open, trying to break higher, but then falls below its VWAP and remains below its VWAP for a majority of the initial opening range, first hour. Look at again though, flat VWAP, contained within the deviation bands, and oscillating both sides of the VWAP, not picking one side. So again, we're stuck in that counter trend or kind of containment behavior until later in the day we do pick a direction and fight our way up into the fast lane. I'm not sure about this big selling around 3 o'clock. I don't know if that was a news event. Notice that when the market has kind of phased out of the sideways behavior, it's just like a different personality of market. It picks a direction, it tries to stay on one side of the VWAP, and even though there is this brief burst of selling, it recovers quite quickly and tries to make to a new high before pulling back lightly at the end of the day. Still mildly bullish going into the next trading session. I don't think anyone should remove counter trend trades from their list of potential setups. You just have to augment your expectations. You have to recognize that when the market is in, here, let me clear these drawings, get back. When the market is in a very flat VWAP environment, and therefore we are more likely to be reverting back towards the volume weighted average price rather than trading away from it. The challenge is that you have to trade near a relative extreme like the -1 deviation band or the +1 deviation band back towards the volume weighted average price. And there's no guarantee that we're going to get a cross of the VWAP, giving you the opportunity to trade from the +1 all the way down to the -1 deviation band. So our expectations have to be kind of softened, right? We're not expecting a massive trade here or a big turnaround. What we're really doing is we're taking a trade from an extreme back towards the average. for just a mean reversion setup. Of the 4 primary trade types, remember that during a counter trend market, we want to be taking type 3s and type 4s. To be crystal clear about this, a type 4 trade or a cross of the volume weighted average price is really more of a change of trend thing rather than it's a counter trend, if you will. What I've found is that type 4 trades are obviously better grouped in the counter trend phase because, let's be frank, it's certainly not necessarily the start of a new trend. It's simply an oscillation or cross through a VWAP that has held us at support for some time. So yeah, type 3 and type 4 trades are our bread and butter during a counter trend environment. We simply have to kind of let go of the belief that we're going to catch the beginning of a massive new trend. In the event that we do, that's a positive surprise. But we also are pretty guarded in the event that we have no evidence. Remember, we have a very flat volume weighted average price, and VWAP tends to have inertia about it. It tends to stay doing whatever it's doing. So if it's flat, likely the VWAP is going to remain flat, and we are going to remain flat for some time. Meaning, therefore, we're in a counter trend environment. We're not likely to catch the beginning of a large new trend. When it does occur, in the event, let's say you had been taking a counter trend trade here, you'd be quickly out of that position because as soon as we get up into the fast lane, slope starts picking up, and we've spent a lot of time on one side of the VWAP versus the other. Remember that explainer the other day? I'm going to draw 2 different scenarios. So we've got a flat VWAP with price oscillating, or we've got a sloping VWAP with price staying on one side of the line or the other. And then, of course, containment within the deviation bands versus some containment until we break out, at which point we've got the deviation band offering containment or support rather than resistance. So if we're looking at 2 different styles of market, right, we've got counter trend and trend. During a counter trend phase, the magnetic attraction is what we're trying to key in on. Whereas that magnetic repulsion, movement up and away from VWAP, movement away from the deviation band or away from the center of the chart. I also acknowledge that these aren't as juicy or exciting of trades as the strong trend trades, but they are much more common. And that's why I'm saying not to take it out of your wheelhouse or not to try to totally focus on trend trades the entire time. Okay, so kind of a slowdown type 3 rather than a proper type 3. Let me move this out of the way for a second. We'll actually remember there was on Netflix a bit of an example of that. Okay, so we're zooming in on just today's trading on Netflix. Very strongly sloped VWAP. And then it stops, right? It hits this important low, some decent volume at least, and big green candles crossing back from the fast lane into the slow lane. Rather than necessarily waiting for the market to go all the way up to VWAP, come down and find support, kind of a classic type 3 trade back up towards VWAP. So this would be a classic target, right? You're finding support at the DEV band and moving back up towards it. The question was really asking, hey, if I acknowledge that that is a sharp reversal and we've got decent volume, would you ever take a type 3 trade here, moving back up towards the volume weighted average price? Yes, but you get a little risky there because would you have also taken this opportunity with a target of the VWAP? I don't know. I think we would acknowledge that this is not nearly as significant of a low as having seen it continue in a second kind of, I'm drawing a lot on here. Let me actually clean this up real fast. Basically what happened here is we sold off made a flag, and then sold off some more, right? The flag had concluded or completed with a second burst of selling. We started to see really high volume, at least, you know, in some moments there, and then sustained volume on the reversal with a nice wick reversal as well. That looks much more like a low than something like this. Now, in the moment, you might have been tempted saying, well, I could go long right at the cross of the deviation band and put a stop below the low of day. But again, at that point, you're almost, you're risking quite a bit to make, you know, that's not even quite 2 to 1. That's 1.5 to 1, 1.75 to 1. That's closer to what we need, but maybe not necessarily a great setup. I think being able to take a trade as we sharply cross with a stop tightly below, maybe a quarter of a deviation or a half deviation with a full 1 deviation target back up to the VWAP, that makes a little more sense.